All right, let's talk about something that, honestly, touches every part of our lives. Whether you're grabbing a coffee, getting paid, or just driving down the street. We're talking about taxation in the Philippines. So let's dive in and figure out, where does this money actually come from and where in the world does it go?
I mean, think about it for a second. How does a country pay its bills? It's a huge question, right? You've got massive expenses. We're talking everything from paying public school teachers to building new bridges. And just like your own household, a country needs a reliable stream of cash to keep the lights on. And yeah, for the most part, that income comes from taxes.
So what exactly are taxes? Well, at its core, it's pretty simple. They're the mandatory contributions that all of us chip in to fund the whole country. This is the money that pays for the stuff we all use. The schools our kids go to, the roads we commute on, the hospitals we rely on. It's really the lifeblood of all our public services.
Okay, I know the whole tax system can feel super complicated, with all these different names and rules, but here's the good news. Pretty much every tax you'll ever pay can be sorted into just two main buckets. So let's break down the difference between what we call direct and indirect taxes.
Here's a really easy way to think about it. A direct tax? That's like when you pay for your meal at a restaurant. You see the bill, you take out your wallet, and you hand over the cash yourself. Simple. An indirect tax is more like the service charge that's already baked into the total price on that same bill. You're still paying it, but it's kind of hidden in the cost of what you just bought.
So direct taxes are usually the ones we're most familiar with, the ones we really notice. They're taxes paid directly on what you earn, think of the income tax that comes out of your paycheck, and on what you own, like the property tax for your house, or even a capital gains tax if you sell some stocks and make a profit.
Now, indirect taxes, these are the kind of sneaky ones. They're the taxes you're paying all the time, probably without even realizing it. Because they're based on your consumption, what you buy. The biggest one, the one you see everywhere, is the value-added tax, or VAT. It's tacked on to pretty much every single thing you buy or service you use. And that number is 12%. You see it on receipts all the time, even if you don't really register it. Ever since 2006, our VAT has been a flat 12%. So next time you see a price tag that says VAT inclusive, you'll know that this 12% is already mixed into that final price you're paying.
But here's where it gets interesting. Indirect taxes aren't just about raising money. Sometimes they're used to, change our behavior. A perfect example is excise taxes, which you've probably heard called sin taxes. These are slapped on things like alcohol, cigarettes, and even super fancy cars to make them more expensive. And the whole point? To kind of nudge us to buy less of them.
Okay, so we know what taxes are, but who's actually making these rules? Where does all of this come from? It's not just random numbers, right? Let's pull back the curtain a bit and look at the legal blueprint for the entire Philippine tax system.
It all starts at the very top with the 1987 Constitution. That's the foundation, setting the big core principles. Then you've got the main rule book, the really thick one, called the National Internal Revenue Code. That's the one that gets major updates with big laws you hear about, like the Train Act. And then, bringing it closer to home, you have the Local Government Code, which is what gives your city or your province the power to collect their own local taxes. And this line from the Constitution is absolutely crucial. It says taxation has to be uniform and equitable, and that Congress needs to create a progressive system. Now, progressive is a key word here. It basically means that the more you earn, the higher the percentage of your income you should pay in taxes. That's the goal, the ideal. Of course, actually making that a reality that everyone agrees is fair, well, that's a whole other story and a constant debate.
All right, so after all that, who actually collects the cash? It's pretty straightforward. There are two main players. For all the big national stuff, we're talking income tax, VAT, the whole shebang, that's the job of the Bureau of Internal Revenue, the BIR. But for the things specific to your town or city, like your business permit or property tax, that's handled by your local treasurer's office.
But the system we have today didn't just pop into existence. Not at all. It's actually the result of centuries of change, of trial and error. So let's take a quick trip back in time and see how this whole thing evolved. It's a pretty fascinating story.
And this timeline gives you a great bird's-eye view of the whole journey. I mean, look at this. It all kicks off with the Spanish demanding tributes. Then that changes into the cedula, which was basically a poll tax. The Americans come in and create a more formal internal revenue law, and then boom, we hit the modern era, which is when we see huge reforms like the VAT we all know today.
So let's go way back to the beginning, during the Spanish era. Back then, taxation wasn't really about nation building, it was about funding the colony. These tributes were collected by guys called encomenderos.
and people could pay with whatever they had, cash, crops, you name it. This system was literally what paid for the Spanish administration here.
Then, in 1884, things changed. The tribute system gets tossed out and replaced by the cedula personal. Now, this thing became a massive moneymaker for the government. But here's the catch. Even though it was supposed to be a fairer system, in reality it was a really heavy, sometimes crushing burden, especially for the poorest farmers.
Then the Americans took over, and they had a totally different goal. They wanted to make the Philippine economy self-sufficient. So in 1904, they rolled out the Internal Revenue Law. This was a huge deal because it introduced taxes that look really familiar to us now. Taxes on big corporations, on banks, and yep, the very first sin taxes on things like booze and cigarettes. That idea definitely had staying power, huh?
Fast forward to the Commonwealth period, and the system keeps evolving. The cedula is finally gotten rid of, replaced by a residence tax. And this is a big moment. It's when the very first National Internal Revenue Code gets written. But even with all these changes, there was a persistent problem. The tax burden still landed hardest on the lower classes.
Okay, so from independence onwards, the system has just been constantly changing, constantly being tweaked. You had the Cory Aquino administration introducing the VAT back in '86. That was a total game changer. Subsequent governments expanded it, beefed up the sin taxes, and that really brings us right up to the present day, where you always hear politicians promising that the next big tax reform is what's going to unlock our economic potential.
So when you think about it, from ancient Spanish tributes all the way to taxing the digital economy, the story of taxes is really the story of the Philippines itself. It's a system that never, ever stands still. It's always adapting, which leaves us with one big question to chew on. What's the next chapter going to be?